Okay, are we still here?
Yes.
Yeah.
Okay, great. So this is chapter 3, job order costing flow, right? So this is how our cost will flow in through our accounts in this chapter. So this is where we learn how our costs will flow. This is kind of continuation of chapter 2. It used to be covered actually together with chapter 2. So, but now it's split into 2 chapters. So we learned in chapter 2 how to do the overhead, right? That was kind of the main thing, how to do the overhead. But we emphasized in those exercises that we did at the end of chapter 2, we emphasized always kind of to go through step-by-step things to some kind of procedure and say, you know, not forget that, well, what do we need to make a product? Direct labor, direct materials, and overhead. And then we dealt with overhead separately because that was a harder thing to do. Sometimes we are just asked about overhead, right? Sometimes the question is asking just about overhead. But in general, the question is more likely than not asked about cost of goods sold or cost of units, cost per unit of a product or something like that. So, so we always keep in mind, well, in addition to overhead, because we are focused so much on overhead because that's kind of the more difficult thing to do, we always keep in mind, well, we also have direct materials and direct labor. So this is what we will do now in this chapter 3, put everything together and move direct materials, direct labor, and overhead together through different accounts, and then end up with cost of goods sold finally in a cost of goods sold expense account, right? So let's go. Okay, so we just reviewed this now. So we have raw materials, we have work in process, cost of goods manufactured, finished goods. These are some of the accounts. These are the key definitions. Again, you're not memorizing these things. You understand them, what they mean. You're not by not memorizing. I mean you're not memorizing the definition itself, but of course you understand what it means. So raw materials are materials that go into final product. They can be direct, indirect. We covered this in earlier lectures. Work in process is an account, right? Work in process is an account where units are worked on, and some units are fully completed, and once they're fully completed, they move to finished goods account. These are just accounts. You can think of them as some kind of maybe place, right? Work in process, you might think of it as a kind of a factory, right? This is where things happen, work in process. This is where you're putting in your materials, labor, and overhead together to create a product. Once you create a product, you will move this product to, let's say, warehouse. And that would be finished goods, right? Finished goods warehouse, let's say. And then over there, the goods will be waiting to be shipped, sold, and shipped to customers. Okay. Cost of goods manufactured is just a definition of cost that we put into products that are completed, finished. Again, this all becomes clear and more specific when we actually start looking into these accounts. So this is the conceptual overview, right, of our flow. I do it in a couple of different ways. So this is one slide, and this is another slide. It shows the same thing, right? So this slide and this slide, they show the same thing basically. Just kind of the breakdown is a little bit different, so you see what's going on in terms of how these items are kind of distributed, right? So, for example, these are the costs on the left side that we know that go into product: materials, labor, and manufacturing overhead. This thing in yellow, right here. These costs here, this thing in yellow. So materials, wages, and overhead. So those are the costs. How will these costs now, where will these costs go? Well, these materials here, okay, so in the middle here, you have these inventory accounts, balance sheet inventory accounts. And then at the end, you have income statement expenses, which is cost of goods sold. And then on the bottom, you have period costs, which are separate, right? Selling and administration, these are separate things. They're not included in our cost production. Usually, we don't care about these when it comes to a lot of calculations because the calculations problems are dealing with product costs. Now, if we have a like income statement, then of course we will have selling and admin costs included over there because they're part of the income statement expenses. But otherwise, we will often not care about these at all. So that's why they're kind of separate down there. So especially in this chapter here, we are focused on these above product costs, materials, wages, and manufacturing overhead. And again, everything ends up finally at the end in the income statement in cost of goods sold. So this thing in between, in the middle here is important, right? These balance sheet inventories, balance sheet accounts, called inventories because these are inventorial accounts, right? So costs are sometimes sitting there and then they're moving from one place to another. So we have some beginning, we have some ending balances, something that you learned in financial account 2101.
Hey, Professor, quick question.
Yes.
And what does the DL and IL stands for? Direct and indirect labor?
Correct. Direct labor and indirect labor. Correct.
Cool. Thank you.
And IM is indirect materials. So, so the two main things here in these balance sheet inventory accounts are really work in process and finished goods. This raw materials here account is the only reason it's there. First of all, because it's inventory account, right? There's an account that holds our raw materials, right? But it's important because some of our raw materials can be direct materials and some of them can be indirect materials. And then we have beginning balances. We have, and then we are having some purchases, which you see in yellow here, material purchases. And then we have ending balances. So this is why this raw materials account here is important. So you have to keep that in mind. Of course, when you're calculating how much raw materials you used, let's say for this period, and also how much of those are direct and how much are indirect. But really the kind of the two main accounts here are work in process and finished goods. So you can see under raw materials in the middle, you can see DM, that's direct materials, and then IM, and it says they go to manufacturing overhead, right? So this slide is a little bit, I mean, this also a little box with DM and IM go to it. You know, it's not a lot of space in the slide, and but otherwise I would have preferred to put the arrow kind of from indirect materials to manufacturing overhead, but you will see this, I think, on the next slide. So because some of the materials will be direct, and we know that direct materials we can trace directly to the product, right? We said this at the very beginning in chapter 1. So we can trace this directly to the product. So this will go straight into work in process. But indirect materials will not go straight to the work in process. Why? Because we cannot trace indirect materials directly to the product. First, we will send indirect materials to manufacturing overhead, because all indirect costs are going to manufacturing overhead. Again, the arrow is missing, let's say, from indirect materials to manufacturing overhead, because that arrow would be kind of crossing here a bunch of boxes, so it would not look great.
So only indirect materials. So only indirect materials will be the ones that go to manufacturing overhead.
Yes, very good, correct. Indirect materials will go to manufacturing. No, not only. I mean, indirect labor will also, as you can see it here. As you can see it, as you can see it here, indirect labor will also go to manufacturing. But indirect labor was here. Again, I had space, so it was neat. So I could just put it here next to this arrow, going to manufacturing overhead. And direct labor, as you notice, is going directly to the working process. Okay, so I can do it now here and say, okay, indirect materials would first go. You see how it's not really pretty. Would go first to manufacturing overhead, and then from manufacturing overhead, it would go back to working process, right? And the reason for this, again, is because we cannot trace it directly to the product. But direct materials here, as you can see, it goes directly to the working process. So, and then we have working process, right? Well, before we get to working process, we have wages. So wages, direct wages, go straight to working process. But indirect labor, indirect wages, they go to manufacturing overhead. So remember, we are collecting stuff here in the manufacturer, any costs that are not direct, indirect costs. And then those costs are going together on some basis that we learned in chapter 2. They're going together to work in process account. So now everything is in work in process, one way or the other. And what is work in process account? Well, work in process account tracks how much cost we put into our products. Again, you can think of it or imagine it, maybe easier. You can imagine it as this is a factory, right? This is where things happen. This is where workers work and materials is added. And then there's also manufacturing overhead. And all of this is putting it together and producing products. And then some products are finished at the end of the year, at the end of the period, I'm sorry, whatever the period is, month, week, it doesn't matter, day. Some products are finished, some products are not finished. So they're still in work in process. You learned this too in 2101, but we will briefly go over it now in this chapter. And then once the units are finished, they will go to finished goods, right? So, and then finally, when they're sold, those costs will go to cost of goods sold, okay? So now you know, when we were doing last time in chapter 2, our calculations, now you know, so things end up here in cost of goods sold, and then we have to make adjustments or not, right? So this is now, we are really going through the whole thing. Okay, any questions about this? Well, let's go to the next slide and then maybe questions about just this movement first. Okay, so this is the same thing, except maybe this one is a little bit clearer if you want, but that's why I did it, because, okay, so there's manufacturing overhead is a little bit more clear what goes into manufacturing overhead. But this is the movement, right? The process, the way things move. And to make it easy on yourself, you will notice when you read the textbook, when you look at the narrated lectures and this slide, you will see that everything moves from left to right. Okay, so you don't need to kind of worry too much about T accounts. Everything is moving from credit into debit in the next account. So of course you need to know accounts, but everything is moving from the debit side to the next account. I mean, from the credit side to the next account, debit side. And then from that account, from credit side to the debit side, right? So these are the debits and credits here, half and half, right? Each one of these inventory accounts I'm talking about. Wages and overhead don't have debits and credits, but overhead actually has debits and credits. What did we say last time? Manufacturing overhead would have what? Anybody remembers? Manufacturing overhead would have what kind of what type of overhead do we have?
You mean actual and applied?
Very good, excellent. Who is this?
Lucida.
Lucida, excellent. Extra point.
Thanks.
Imaginary. I have to say that because there's no way for me to remember. But excellent, applied and actual. So again, you don't need to use T accounts. You can just do it and say actual, and applied, and keep track of this, actual and applied, right? You don't need to. But if you like to use T accounts, like here, then you would say here, actual is on the debit side, and applied is on the credit side. And again, same like with everything else. So applied, which overhead would go into work in process? Well, applied overhead, right? Applied from the right side here. Applied overhead would go to work in process, not actual. Actual overhead, we are just keeping track of things here. Well, we are keeping track of applied too, of course, but we are applying it actually to products. But, and then sending it to work in process. But actual, we are just keeping track of it, and then at the end, we will make our adjustment. Yes, we remember this from last time. So, you can see here these raw materials. You can see these raw materials here, account. So you have, you purchase some materials, you add to this account, and then some of these are going out as direct materials and indirect materials. Where are the indirect materials? Well, they're here in manufacturing overhead, right? But direct materials are going directly to work in process. Then we have wages, which we need to make a product, labor, and we have direct labor going straight to work in process. And we have indirect labor here in manufacturing overhead. And then we have other manufacturing overhead, right? And then you can see all three of them are going to work in process, to our factory. Once we make a product, we create a product, it's finished, then this product will go into finished goods. Again, you can use the accounts, you don't have to. We will see in a second. And then from finished goods, once the product is sold, it's going to cost of goods sold. Okay. Any questions about this movement here? This is very conceptual, but some of it you should remember, again, from 2101. If not, this is probably the only chapter, maybe what else? Yeah, you know, where you will kind of have to remind yourself a little bit of 2101. But again, if you are not comfortable with journal entries or things, you might have to review those just for this chapter in the textbook. You don't need to go back to your 2101 textbook and now go over all those accounts and debits and credits and the whole financial accounting equation and things, but kind of just remind yourself of basics through this chapter, not through anything additional. Any questions about this, how the costs move here? Okay, everybody's good. And again, you can see down on the bottom, separately, period costs, not involved at all in this here, in these product costs, right? They are completely separate. Now, if we are doing, again, income statement, which we will see later on, then you will see, well, we will include, of course, selling and admin costs. So these are the journal entries. I will go very quickly through these. You can go through these in the through narrated lectures, and just again. So raw materials, you have some purchases, you add them to this account, and then, as you can see, direct materials are going straight to work in process, but indirect are going to manufacturing, and they are going to actual side of this account. Why? Well, because we are just adding these to, we are not adding actual materials to anything to the overhead. We're just keeping track of costs. These are just numbers, right? These are just dollar amounts. We will send indirect materials actually to the, of course, to the factory, right? But applied costs will be applied to work in process. But these actual amounts of these the indirect materials and indirect labor, we're just keeping track of these accounts on the actual side of manufacturing. Because remember, applied is based on our estimate, right? What we estimated at the beginning of the period. So right now it's empty because we didn't produce anything yet, let's say. But once we start making a product, then we will start seeing amounts over there, because those amounts will be based on we know what will be based on POHR times whatever usage of the activity base for that product. So then we will suddenly then see over there number, $10, $20, whatever. Same thing with the labor. Direct labor straight to work in process. Indirect labor, we are keeping track. We're just keeping track of actual costs that we are spending in this period, actual costs. And then we have other overhead, which will be there again on the actual side as just a number. Let's say we spend in other overhead $500,000 in this period, but this is all separate from what we applied. We know this. We applied, overhead applied will go to work in process. We again know this from chapter 2, that applied overhead is going to work in process. And the reason applied overhead is going to work in process because we estimated things and then we calculated POHR, and then we know actually how much time or usage or whatever activity we are using to make a product. So we are applying this to our product. So this is going, and then at the end we will just compare these actual and applied totals to each other and see if it's over or under applied. Okay, so that's chapter 2. And then we have work in process account, right? So this is our factory. So you can see this product being moved from the factory to finished goods warehouse, right? So so we use these direct materials on the left side, direct materials, direct labor, and applied overhead to make a product. And then once we finish the product, we call this cost of goods manufactured, right? This cost that we invested into this product to make it. So you can think of this, you need to know this name, right? This term, cost of goods manufactured, because that might be in the questions or problems, but you can, think of it as cost of goods produced, cost of goods finished, cost of goods moved to finished goods, whatever makes sense for you, to just kind of imagine this and say, well, what is this cost of goods manufactured? Cost of goods manufactured. Well, the cost of goods that we completed, cost of goods completed, let's say. Because there will be some goods in this working process, and this name also might remind you, say, well, working process. See, some of the units are still in process, let's say, at the end of the period. Let's say at the end of the month of March, September, whatever. We do not finish all units at the end of each month, right? Some units are partially completed. So this account, it can remind you by being called work in process. Right? And also some units at the beginning of the period are not just started at the beginning, at this period. Some units are partially completed. So those units that were partially completed in the previous period move in as partially completed into a new period, right? So that would be like beginning costs in this working process. There will be some units, some cost that is part of this account. And we looked at this in one of the exercises in chapter 1, when I said that we were a little bit ahead with that exercise, but that was a very good exercise. So you can go back to that exercise in chapter 1, narrated exercise. It was a little bit ahead because it dealt with this work in process account and things being kind of partially completed, or how much we use to complete or not complete certain product, and then a portion of, maybe not in that necessarily exercise, but right now, a portion of those units that we, let's say, start in this period, let's say in period of March, we will not complete in March. So on March 31st, they will be partially completed. Let's say 50, 60%, doesn't matter. We will not deal with this in this class, with those partially completed units, but there will be some costs, right, that are left at the end. So that will be our ending inventory here in this work in process account. So what's the difference between beginning inventory and all of these things that we put into this throughout the month? And then ending inventory is actually cost of goods manufactured. So that's the cost of units that we actually completed. Okay, so we will go through example in a second. If this was not, this was kind of too abstract, right? So then we have these cost of goods manufactured, and these costs move to finished goods warehouse. Once these goods in the warehouse, and the same thing with a warehouse. We have some units at the beginning of the period, let's say then April 1st or March 1st, whatever. We have some units in this warehouse that weren't sold in the previous month. So now we have some units, and we added more units that we produced this month. That's these units, cost of goods manufactured. And then at the end of the month, we have some units that we did not sell also in this period. So they will become beginning units for the next period, right? So you get the idea. So it's important to be comfortable with that equation, beginning inventory plus additions minus ending inventory, because that equation will be important for example, these accounts. Raw materials account, but more importantly also for work in process and finished goods account. And it will be important for this chapter, for, I don't know, chapter 4, for, a lot of other chapters, for budgeting chapter, it will be important. So it's important to kind of, it's not difficult. We talked about this. We talked about the example. If we had a, small store and we shut it down each month on the last day of the month to do the inventory, right? So we look at our books and we say, we had this much stuff at the beginning of the month, and then we purchased how much stuff throughout the month. And then at the end of the month, this is how much we have now today at the end of the month. This is the last day of the month. So the difference should match our, should match what we actually sold. Right? I'm talking about just a store where we are selling some. If we are making something, then it should match units that we produce. Let's say we're talking about the work in process account. And then in the store, of course, that would have to match with our numbers of our income statement of our revenue and number of whatever. If we're keeping track of units, how much we sold bubble gums and newspapers and whatever we are selling there, it would have to match together with those numbers, right? So that equation is important. Beginning inventory plus additions, whatever the additions are. In a merchandising firm, we're just buying stuff. In a manufacturing firm, we are making things. Once we sell these things, they go to cost of goods sold account. Cost of goods sold account is not an inventory account. It's just an expense account. And we are keeping track. Again, if you want to work, if you like to work with the accounts, you like financial accounting, and expense account has a debit balance, normal balance, so cost of goods sold are on the debit side. And then on the credit side, we would reduce this account. That's what we did in chapter 2. So we would send these finished goods costs that we sold to our cost of goods sold account. These are separate, right? These are separate. And this is a slide from your textbook. So you can look at this, not slide, but the picture. So this is the, so you should, you can look at this also in your textbook, and you will see the same thing. Things are moving just to easier remember, moving from the credit side to the debit side to the next account. But so you can, you see this in a number of different ways through these few slides. So whatever works for you. Of course, you have to remember these accounts. You have to remember working process account, what it means, what it represents. Finished goods, well, that's kind of easy to remember. Well, finished goods, this is where the goods are that are finished. And then cost of goods sold account is expense account, where we keep track of things, how much we spend to make our goods. Remember, this is not cost of goods sold does not represent our revenue. It represents our costs that we spend to make these goods. Any questions before we move on? Any questions so far?
No.
Okay, very good. Okay, this is a very basic, again, that equation that I'm emphasizing and repeating. It's important. So, basic example. You can see here inventory accounts, raw materials, work in process, finished goods. And once you start working on problems, you will see, okay, I get this. I have to always remember accounts. What are the accounts that I'm dealing with, and which accounts might use this equation, and beginning, additions, minus ending, etc. So it's not hard. So this is why it's important always to follow some kind of procedure for yourself that you created for yourself, either that I suggest here in the slides, or in lectures, or the textbook suggests, of course, or you find yourself, like, well, this is what works for me. This works for me. But I mean, in this case, there's not much to invent. It's simple So we have inventory these accounts, raw materials, work in process, and finished goods. And we say, how much did we have in this, let's say, work in process account? Okay, well, let's say raw materials. So it's raw materials, okay. How much raw materials did we have in this account at the beginning of the period? $5, $5. Then we purchased $8 more of raw materials. And at the end of the period, we have $6 of raw materials. Well, we had 5, we added 8, that's 13. And at the end of the period, we have 6. Well, we deduct these 6 to get 7, how much we removed from the inventory, how much we removed from it. And in case of raw materials, this would be direct materials and indirect materials, right? Both together, 7. Now, the only thing you have to be careful is you cannot send, for example, all 7 to work in process. You cannot do that. Why? Well, you can if all of these 7 are direct materials. Then you can, because it's going straight to work in process as you know, we're tracking it to the product. But if some of these materials are indirect materials, then you cannot send all 7 to work in process. Because why? Why can't you do it?
Because only direct material go to work in process.
What about indirect materials?
They go to manufacturing overhead.
Excellent, excellent. I don't see who is saying this, but that's great.
Part 2.
So, excellent. So, direct materials will go straight to work in process. So let's say direct materials are 4 and indirect materials are 3. 4 will go straight to work in process and 3 will go to manufacturing overhead. And from manufacturing overhead, then they will go to work in process again. But if you say, why are we making this strip? Why am I making this strip if this will end up in work in process anyway? Why are we making this strip? Okay, anybody?
Because we're getting a tally of actual to compare with what we applied.
Say it again.
Sorry, I think my speaker is a little funky. So because we're sending it to manufacturing overhead first in order to keep an account of what actual versus what we applied.
Excellent, that's very good. So these three would be what?
Actual, very good. And we would put it into actual side of manufacturing overhead,
but they will end up in working process anyway. So I'm going to repeat the question because this was good. That was a very, that was a fair answer, but I'm looking for something else, a little bit more subtle, which you know already, but these three will end up in the work process anyway. We have to put them in there because they're used to make a product, right? So now the fact that I said that we will put it into actual, that's true, and then applied will go to the product, to work in process. That's true too. But these three will end up in the product no matter what. So why are we making this strip? What's the difference, right?
Is it because we don't know if it's under applied or over applied?
Okay, it's connected to this, but how do we apply overhead?
Is it because allocated and we can't actually account for how much of it was used in each cost product?
Well, yes. Okay, anybody else before I?
Somebody else tried to say something. Go ahead.
I said we allocate the manufacturing overhead.
We allocate it. Very good. Okay, so that's much closer. That's what I'm looking for. So because these $3 will not be sent straight, as we know. You said it well. It will go through actual. But how will it go through to the working process? It will not go as 3, like these 4 here, direct. These 4 will go directly as 4 to working process. But these 3 will go how? They will go through some kind of allocation, meaning $3 divided, of course, the number would be much larger because it's part of the estimated overhead that we estimated at the very beginning. But eventually, these 3 will go to working process as applied to some kind of allocation, meaning 3 divided by some allocation base, and then we remember rate, POHR, right? POHR, and then multiplied by some allocation base that the product used. So these 3 will end up, yes, in working process anyway, but they will not end up straight as 3, but they will end up there through some kind of rate. So if the rate is perfect, then they will just go as 3. But of course, the rate is never perfect, and the applied overhead and actual rarely match together. So it will be a little bit different. So this is why I'm saying, if you send, for example, if you send in your question, if you send all 7 here, these 7, if you send all 7 to the working process, unless they're direct, all direct, and you will be told, let's say in a problem, you're told, well, all materials are direct materials. Well, if they're all direct materials, then it's not a problem. Then we are just sending it directly to working process. But if it says a portion of this, how much is direct and portion of it is indirect, then if you send all 7 to working process, then 4 will be correct because they are direct materials, right? 4 will be 4. But 3 will not be, because maybe we were supposed to send 2.9 because of allocation base, right?
So that was my question, Professor. So I have one question regarding it. So it's gonna say whether or not it's a direct or indirect, correct?
Yeah, of course you have to be given some information. You're not gonna guess, right? So you're told all materials are direct materials, or this is how much are direct materials, this is how much are indirect materials, right? So yes, of course, you're always given enough information. Now, can you always find it? That's a different story. But you're always given all information in a problem, so you cannot be guessing. But the point here was to recognize how, let's say, materials would behave in terms of direct and indirect, and in terms of moving to the working process. And we spent now reviewing chapter 2 here just with this equation beginning. So that's raw materials, for example. And then we have working process account. Now in working process account, we have the same thing. Let's say 5 in the beginning, partially completed units from a past period that weren't finished. And still now it's $5 at the beginning of the period in working process. And then we added all those materials, direct materials, direct labor, overhead in the amount of 8 to working process account. And then at the end of the month, we have 6 here in the costs in working process in factory, meaning these 6 are units that we did not finish in full, right? We cannot move them anywhere. They're still here in this factory, we have to finish them. So how much cost did we actually use to make units that are completed? So units that are removed or completed would be what? 7, right? 7. Now, in this case, we don't need to worry about direct, indirect, anything. It's just 7. 7 because these are the fully completed units. This is what we called earlier cost of goods manufactured, right? Cost of goods manufactured, or cost of goods completed, or etc. So So these will move to where? These will move to finished goods, And then in the finished goods, we said, we have the same situation. We had some units that we did not sell last period. So they are still in a warehouse for this period. Let's say in February, we did not sell everything. Well, in March, at the beginning of March, we have $5 worth of units. And then we add $8 worth of units that we completed in March. So they go to finished goods account as 8. And then at the end of March, we have $6 worth of units that are not sold. Right? So how many did we sell? Well, we sold 7. Now these 7 are cost of goods sold. Right, so you need to be comfortable with this basic equation. Very important. I mean, I spend a lot of time now on this equation, but it's important. Okay. Any questions? Everybody good?
Yeah.
Okay.
Yeah, thank you.
Everybody good.
Okay, this is the same thing what we just discussed, just with all of these lovely arrows here pointing you to the right direction. So you have a raw materials account, you have purchase, you have beginning inventory, you have purchases, and then you have total raw materials available minus ending inventory. This is how much you used, right? RM used in production. And we said they can be direct, they can be indirect. Direct materials used, direct labor used, manufacturing overhead applied, emphasizing applied, is total manufacturing cost of the period. Total manufacturing cost of the period, right? Now on this slide here, you don't see beginning inventory for VIP and ending, but you see just total manufacturing cost that you used to add in this period. Right, to add, and it's called total manufacturing cost. So
could you be able to explain the RM inventory T account one more time? Because like I understand that you have to do the raw material inventory plus the purchases of raw material, and that will give you the total raw material. But then in the same actual side, do you have to use the ending raw material inventory, like to subtract
yes,
that to
you
the
have
end?
to subtract it. You have to subtract it, yes.
And then that becomes whatever the answer is, that becomes the raw material use in production, correct?
Correct.
So
Correct.
hypothetically, if we have a question based on that one, it would be raw material, beginning of raw material inventory. You're gonna give us the beginning, the purchase, and then whatever the ending is, correct?
It depends. Some items might be missing.
I mean,
but
I understand that because you can give us, okay, if you don't give us total raw material, then you can get, and you give us like the ending raw material, you can always subtract the raw material used in production to whatever
correct.
amount you
Very good. Very good. Yes.
So
very
I
good.
understand that, but like you have to give us 3 at least in order for us to solve this problem.
You
correct?
have to have enough information to solve it. Nobody can solve it if you don't have information, right? Nobody can solve it if you don't have information.
I understand that, but my question is like it should be explicit in the question in order for us to get.
Yes. Explicit means explicit. No, explicit. Explicit means you have enough information. Is it explicit enough for you? Maybe for another student it's explicit, but maybe for you it's not. So I don't want to get into there's no tricks or anything. It's just like everything is there now. If everything is crystal clear and everything is, then everything is super simple, then everybody's getting an A. But nobody ever, it never happens that everybody gets 100 on the exam or on homework or on anything. So I'm just kind of making sure that you understand. All information is in the problem. So as you just said, you have to have like 2 or 3 pieces here sometimes you have to work backward. Sometimes you have to work backward from finished goods to work in process to get, let's say, to materials, right? But yes, in general, you're given straightforward, okay, this is the beginning inventory, these are the purchases, this is the ending inventory, how much did you use? Well, that's how much you use. So you need to know the equation. Yes, that's the bottom line. So remember this term, total manufacturing cost. Total manufacturing cost means the cost that we added in this period, right? In this period. So not beginning inventory, and of course not ending inventory because that's what left over, but cost that we added in this period. So in this period, we added direct materials, direct labor, and manufacturing applied, and we have total manufacturing cost. Total manufacturing cost. So now in the work in process inventory account, we have beginning work in process inventory, and then we have total manufacturing costs of the period, which now we know what they are, minus, so same thing, minus work in process cost of goods manufactured. Where do these costs of goods manufactured go? They go to where? Finished goods. Huh? Say it again. Okay. So they go to finished goods inventory. And then in the finished goods inventory account, we have some number, let's say 20 at the beginning, 20 here, and then we added 50 of our cost of goods manufactured. So those are new units that came into the warehouse in this month. So we have total units of 70 cost. And then at the end, we have 30. Well, how much did we actually sell? In this case, well, 70 minus 30, 40, right? So again, need to practice this. Need to look at these problems and practice. Don't worry about it. You know, if you're missing something right now, of course you have to go back and do this on your own and look at this again. And you can do it through T accounts if that works for you, if you like it that way organized. But if you don't, you can just be adding them up, beginning, additions, minus ending, boom. You need to know where things are going from where. And then these 40 will go to cost of goods sold here. So we sold $40, and not $40 worth of goods. We charged much more for these 40, but this is how much they cost us to make. And then we will have some, again, here applied. We would adjust it for over or under applied. So if we had some over applied, we would plug it in here. So this would reduce our cost of goods sold, let's say, to 35 or something like that, for example. Or if we had under applied, then we would add here 5. So we would end up with 45, right? Questions? Any questions?
No.
Everybody good?
Yeah.
Okay. And then this is the income statement. And then you see now sales, and then you have adjusted cost of goods sold. So you have cost of goods sold, let's say those 40 plus adjustments. So 35 or 45, whatever you end up with, or 42 or 39 or whatever it is. And then you have your gross margin. And then only then you have to, let's say, look at, well, okay, what were the selling and admin expenses to get to net operating income? So, I mean, as you can see, this is just a recap. And this is an example that I will let you do. Let me see. Yeah, I will let you do this example on your own because you don't need me to go through these slides. So this is, everything is self-explanatory here in these slides. Of course, in the narrated lectures, but actually, I'm not even sure if I do this in narrated lectures because everything is self-explanatory, everything is clear. But as you can see, you know, we are moving kind of pretty fast here, and things are looking different, right? So it's not like we added 1 + 1 in chapter 1 and then +1 in chapter 2. So that's now 3 + 1 in chapter 3, that's 4. So we are kind of adding more and more information here. So so it's important to stay on top of these things, and now go back right away, and maybe you already looked into narrated lectures, but go right away into the slides and go into narrated exercises and try right away practicing these problems. So we'll now go through a couple of.
Professor?
Yes.
I have a question. For example, if we have like damaged or expired goods, they would go into a selling and administrative expenses, or where would that go?
What kind of expired goods?
Or damaged, like
right, damage. Yeah, we will not worry about this in this class. That's a financial accounting topic, financial accounting class. Usually those units are, I mean, they're dealt with here in the working process, right? And then eventually in cost of goods sold. It would depend how we classify these goods as a scrap or, I mean, that's a little bit more complicated. Maybe, again, we will not have to deal with this here, but it would definitely not go into sales and admin, because again, these costs, these have nothing to do with sales and administration, right? Are you with me?
Yes, I understand.
Yeah, so we would definitely not send these costs that you just are mentioning, asking about, to sales and administration, because again, sales administration is a completely separate thing. We would deal with these costs, again, it depends. Sometimes we have let's say a product that was, okay, a t-shirt with a flaw, right? We produced a t-shirt, it's not perfect. And we cannot, now, are we gonna throw it away? It depends. If it's completely like, torn t-shirt, I mean, it's like just a machine just cut it into pieces, then of course it will go into just scrap, right? If we can use this material again or something, we would account for this somehow. It would either go back to materials, or it would simply go to waste, and that would be usually it ends up in cost of goods sold, because it's cost of production, right? Even though it's not necessarily a part of our units that we actually produce that are perfectly fine and that we send to a customer, right? But it's a cost of production anyway, so it might end up in cost of goods sold. We would probably, label it somehow as scrap or waste or something else. Sometimes we produce again a flawed item that is not perfect. So that's like when you see those t-shirts, socks, and things in those discount stores, and it says marked with like some kind of flaw, right? And then you're looking at them, and actually you cannot find the flaw maybe at all, or sometimes it's obvious, right? Something maybe misprint, or just stitching went across, or something else. So the product is not perfect, right? So the customer will not pay the full price for this product, but you will get something for this product, right? So where's the difference in this? Well, it will likely also be included in cost of goods sold, but not as perfect units. Now, again, because I'm describing it in terms of units, and I'm talking about units here often, and I talked about VIP as a kind of a factory, and this is where we are making units. But of course, we are always just talking here about the dollar amounts, numbers, right? So we are here not seeing these units actually, but I'm just talking about units to help you visualize easier things. But we are just seeing a bunch of numbers, right? We're seeing in cost of goods sold, we're just seeing $700,000 cost us. Now, of these 700,000, yeah, 680 might be perfectly fine units and everything, and then 20,000 might be scrap waste, all kinds of things, or units, partial, but not partially completed, but units with flaws that we still were able to sell and things like that. So That's a good question. But it's not important for us here in this class. We will not have to deal with this. So you don't need to worry about it. Is that okay?
Yes, thank you so much, Professor.
Yeah, but definitely not in sales and administration. Definitely not, because sales and administration, completely different thing. So what we talked about here in this chapter 3 now, mainly, yes, we have to mention selling and administration, but only when we get to the income statement, right? What we are concerned mainly here is here in these adjusted cost of goods sold, which is giving us gross margin, because that's what we discussed here in this, we are discussing in this chapter. And again, you will go through this example on your own through either PDF or, I mean, if it's actually covered in narrated lectures. I might have skipped it because it would be, the lecture would be too long then, and you're not very patient anyway. But most of the students, I should say, but to go through the narrated lectures, they're too long. But PDF slide is enough, so you go through the problem and you just see, okay, this is how it moves. So our main concern here is, again, what? Direct materials and indirect materials, labor, direct and indirect, and manufacturing overhead, things that we are using to make a product, I'm repeating and repeating this again and again, because this is kind of then you develop kind of a nicely ordered way to approach each problem. You say, what am I looking for here? What type of problem is this here? What do I need to do? You know, so for example, you're ignoring completely selling and admin costs, because a student who doesn't know the material will, yes, then go start just picking around different numbers, adding up things that don't add up, or they should not be included in, let's say, calculation. Okay, any questions about this chapter so far before we try to do a couple of exercises? Everybody's good?
Yeah, everything good. Thank you.
Okay, great. Let's go to exercises for chapter 3. Okay, so let's do this basic exercise here. Prepare a schedule of cost of goods manufactured. You see, cost of goods manufactured. Prepare a schedule of cost of goods sold. Now, usually on the exam, well, not always, but you know, usually, let's say, you just ask straight cost of goods sold. But to get to cost of goods sold, of course, you need to already complete cost of goods manufactured, we said, because you need to get to finished goods account and then sell these goods. So again, don't expect always, you know, things to be step by step, everything kind of broken down into minor steps. You need to be able to go through multiple steps to get straight to the last question, which is kind of the main question. Although, well, okay, I'll get to this. I might revise the exam a little bit due to being online, I think, so maybe a little bit simpler questions, but more questions. So, but I will inform the class about this. So just to now kind of confirm that we were all here. So what is the cost of goods manufactured? What's the meaning of this term, cost of goods manufactured? Anybody?
Those are the finished goods.
Excellent, excellent, very good, very good. Again, for some reason, I cannot see people here who are, you know, saying things, and I cannot see faces, I guess, because I'm either sharing or recording or something, but that's great. Yes, cost of goods manufactured, costs that are finished, completed. And then they're moved from work in process account to finished goods account, to the warehouse, finished goods warehouse, right? And waiting to be sold. Very good. Okay, so let's look at this. And then we also have what? Assume that the under-applied overhead is close to cost of goods sold. Assume that the under-overapplied, so we will have to make an adjustment, right? Actually, we had already given. So let's look at the information. Purchases of raw materials, indirect materials. So you have to be careful right away. Indirect materials, right? Direct labor, manufacturing overhead, applied, and under-applied overhead. So we are told that we have under-applied overhead for how much? $4,000. Okay, so now we have to figure out cost of goods manufactured. Of course, we want to get to cost of goods sold, but we will go through cost of goods manufactured. So, as I said, what do we do first? We make a check. We say, what do I need to make a product? Direct materials, direct labor, and manufacturing overhead. Okay, so let me look at this information. Where is my direct materials? Direct materials, direct materials. Do you see direct materials anywhere here? You don't, but it says raw materials. Okay, so what do you do with this now? Well, you have raw materials here too. But it doesn't say raw materials. You know you need direct materials, and you know that indirect materials are here in manufacturing overhead. So where do you find direct materials then? Well, they are, yeah, go ahead.
Don't you make beginning plus purchased equals ending? And then you find the consumed one. No,
yeah,
beginning
not
plus purchased minus ending equals the direct material used.
Excellent, excellent, very good, beautiful. So you say, okay, how much raw materials did I actually use? How much? And then I will figure out if all of these, okay, so I had 30 at the beginning of the period. I'm sorry, 12. 12 at the beginning of the period. I purchased 30, so I had 42, right? But at the end of the period, I had 18. So minus 18. So what is this?
24.
24. 24. So 24 here are raw materials that we use. Raw materials. Now, as I said earlier, you're given all information. Now, if you say that all of these are 24 direct materials, that's just assuming that all of these raw materials are direct materials, assuming. But if you read information carefully while you're looking here, it doesn't say anything about direct materials, nothing here about direct materials. You don't have any number about direct materials specific, but you have indirect materials here, 5. So if indirect materials are 5, how much are direct materials then?
24 minus 5, 19.
Very good. Well, 19, excellent. Direct materials are then 19 because they have to add up to total of raw materials. Raw materials means, now, if you were told here, all raw materials are direct materials, well, then you know that these 24 are all direct materials. That's fine, right? But you have to always look and be careful. So these indirect materials here are 5. So now you know that direct materials are 19. Okay, very good. So we say here, you see the equation, what we just did, and then we say raw materials are 24 minus 5, we end up with 19. Very good. So now we know that our direct materials are 19. Okay, 19. Now, direct labor says here 58. So we have nothing to worry about this. So that's direct labor, 58. Remember, it can be indirect labor also. So it might say wages. Wages are 100. Indirect labor is 42. Well, how much is then direct labor? It's 58. But where is 42? Same like these 5. Where do you include these 5?
Manufacturing overhead.
In manufacturing overhead. Very good. So these 5 are included in manufacturing overhead. Now, manufacturing overhead applied is already given to you. So these 5 are actually included, these 87. You don't need to add them to these 87. They're already included no, I'm sorry. These 87 are applied. You would add these 5 to actual manufacturing overhead. Actual. Only if you ask for adjustments, right? And we will see now. We don't have any other here overhead to add to anything. We already given under applied overhead. So, so these 5 would just be sitting there, right? You don't really care about them, except for this reason here, to find out these direct materials, 19. Because you don't add these 5 to 87. Why? Because these are applied. This is applied overhead. Those 5 are actual overhead that we actually spent, right? So now we have applied overhead of 87. So we have total manufacturing cost of 164. This is the cost that we added to our working process in this period. Well, if we added this, we have to go through the same procedure, that equation with working process. We have beginning of 56. It's here. And then we added these 164 in this period. And then we end up with ending inventory of 65 minus. So that's 155 cost of goods manufactured. So this is how much the units that we completed cost us, 155. Where will these units go? They will go to finished goods. And over there, we already had 35 in beginning inventory. We add these units that we completed in this 155. We subtract the ending inventory because this we did not sell in this period, 42. So how much did we actually sell? 148. In cost, again, this is not our revenue. 148 cost of goods sold. Okay.
Sorry, Professor, can you say again what does TMC stands for?
Which one?
In working process or working equals.
TMC is total manufacturing cost.
Okay, got it.
Total manufacturing cost that we added in this period, as you can see here, cost that we added. Which cost did we add? Direct materials, direct labor, and manufacturing overhead, right? Okay. Now, we already have here that our overhead is under applied for 4, right? And if I applied overhead is 87, and our cost of goods sold are here 148, unadjusted. Well, if it's unadjusted of 148, and we under applied our overhead for 4, what are we going to do? Well, we need to add these 4 to 148. Why? Well, because we did not apply enough overhead. So 148, these 148, we need to add 4 more, chapter 2, to get to 152 adjusted. Now, what was the actual overhead? What was the actual overhead? This is not a question in this question or in your textbook, but I added it here. What was the actual overhead?
87 minus 4, right?
Well, not
No.
minus 4, but
Under applied plus 4.
Plus 4, very good. But I appreciate the attempt. So plus 4. Why plus 4?
Because it's under applied, so you want to make
Because
it
it's
even.
under applied.
Under.
Very good. We want to add more to our costs. Why? Because we spend more, right? And how much did we spend actually? That's what I'm asking here. How much? What's the actual overhead? Well, we actually spend 91. We actually spend 91. Okay. How do we know? Well, again, we know because we know that applied is 87 and under applied is 4. So these 5 here would be what? Would be part of what? Of these 91, right? Of actual.
It's part of the 87. It's inside, right? The 5,000, you mean?
Yeah, yes, but not. Yes, as I said, you can think of it as part of these 87. That's true, but I don't want to say it's part of these 87 because people might decide to add this to this or might decide to stop. No, this is applied. Hold on a second. This phone is clearly ringing. Okay, we can continue. Because these 5 are what we actually know, that we spent, and they're actual, right? Actual. These 87 are based on what? We said they're applied. They're based on what? They're based on POHR, and times activity base.
Units. Oh, okay. Yes.
Units. It can be units. It can be, but usually it's like machine hours, labor hours, or something else. But these 5 are actual amount that we didn't know at the beginning of the period or whatever. We don't know this amount. This amount is, let's say, for this period now we know it. It's 5,000. That's part of the actual overhead. Now, yeah, you might make the case and say, well, but these 87 are anyway part of these 91. Yes, but again, not necessarily. What if these 87 are minus 4? Then it's what? Then it's 83, right? If we over applied instead of under applied. You with me?
Yes.
I'm not totally understanding this part where. So
yeah.
Where are we getting, like, how's that relate, like the indirect materials that we included in manufacturing or overhead? They should be inside the manufacturing overhead. You're saying that's the actual, right? Because the applied one, we applied based on the allocation base. It has nothing to do with what we actually incur, right?
Yeah, very good. Excellent. I like that. I mean, of course, I said earlier, of course, it has to do with something. I talked about this in the lecture. Of course, these 5 are in this. Of course, these 5 are applied somehow, right? They're applied because we spend them, so they're applied to the product somehow. But we have to be careful here. This is accounting. This is not just we say. We have to be careful about these 5 specifically. Are they $5,000 or $4,900? We said earlier, because maybe because of the POHR and the allocation base in these 87, it's not actually 5. Maybe it's 4,900, right? Now, since this is accounting, we care about these $100. And since you want to get correct answer on your questions in a homework or exam, whatever, you care about these $100, right? So you cannot say these 5 are, again, in this case, you would simply ignore them for anything other than finding out those 19, right? But you would ignore them after that. Are they part of 87 or whatever? And this question did not ask for these 91. But the bottom line is, as we talked in chapter 2, and I mentioned just now, we have here overhead, right? Maybe this will now help. Manufacturing overhead. On this side, we have actual, correct? And on this side, we have applied. Now, on this applied side, it will be what? 87 here, correct? Yes, the last person.
Yeah.
Yeah. So 87 will be on the applied side. But what will be on the actual side? These 5. These 5 plus all of these, the difference of these what? 91 minus 5 is 86, right? So at the end of the period, you have what? 91 here, actual.
4,000. Oh.
And you have here 87. So you have 4,000 difference, correct?
As a debit, right?
You have 4,000 difference. Now you have to bring it to the same level. You have to add 4,000 here to this applied, meaning you have to add these 4 to cost of goods sold. So you end up with 152. So this is why these 5, I don't want you to, of course, these 5 would end up in a product somehow, meaning they would be somehow in the applied, but really for us here, they are not part of these 87 because these 87 are applied and these 5 are just what we are keeping track of. We might see in the next problem a little bit better how we actually add things to some kind of list of, so sometimes we would have a list of things. So indirect materials will be 5 here, and then indirect labor will be 20, and then some other manufacturing overhead would be what? 20 plus 25 minus 91 would be what? 66, right? 66. So now you have other manufacturing overhead, security officers, wages for some indirect labor, indirect whatever. It's 66, plus you have indirect labor is 20, so that's 86, plus 5 for indirect materials, that's 91. And you would have here 91, and you would compare it to applied of 87. And then you would get under applied of 4. Does this make sense now?
Yes, it's very clear.
Yeah.
Thank you.
No, the person who said wasn't sure about.
Yes, Professor, it's clear.
Okay, great.
Thank you.
All right, let's go to the next one.
Professor, I have class right now, so I'm going to go, but thank you very much for your time to conduct these sessions.
Okay, great. Again, unfortunately, I don't know who it is, but that's great. Yeah, I will post the recording, so you'll be able to see the rest.
Yeah, this is Lucifer, but thank you.
Okay, thank you. What is this here? Assume the company overhead close to what with journal entries, predetermine overhead rate. Actual applied. Well, this is similar to chapter 2 question. Determine the amount of under or over applied for the period. Well, this is similar to chapter 2. We just have to look at the how much is the applied actually, how much is the actual, and then compare them, right? What is this one? Schedule cost of goods manufactured. Okay. Direct labor. I'm looking just for something interesting so that you cannot see in, that I can emphasize maybe that is not in the, it's all in the narrated lectures. And raw materials purchases. Manufacturing already applied to work in process, actual manufacturing. Okay, so here, for example, you have manufacturing already applied to work in process, and you have actual. So the first exercise was actually kind of so far the most interesting. So you see how you can be presented in different ways. Now this one is a little bit more straightforward. This is applied working process versus actual manufacturing overhead cost. So so you see that the difference is 10, right? The difference is 10. So those 10, what would we do with those 10? And the rest of the procedure is the same as what we did in exercise 1. You start with your basic, what do I need? Direct materials, direct labor, overhead. What do I need to be careful with? Well, do I have any indirect stuff, indirect materials, indirect labor? In this case, nothing. It says, it looks like it's all direct labor, so nothing to worry about here. And it's all, it seems like direct materials, right? So, so no indirect materials, so nothing to worry about. So we go through the same procedure and we end up with 260 in cost of goods sold. And then what do we do with these 260? Well, we over applied for 10 because we applied 90. We actually spent only 80. So we will reduce our 260 for 10. So we'll get 250 cost of goods sold. And then we have a income statement, 524 in sales. Minus 250 cost of goods sold, that's gross margin. So you need to know this, right? This is chapter 1. The question might be, what's the gross margin? Well, the gross margin is 274, sales minus cost of goods sold. And then minus sales and administration, 203. Where do we see sales and admin expense? Well, we see admin expense here, 63, and we have selling of 140, so that's 203. So our net operating income is 71. So that would be kind of full thing. Okay, this is a good example of what we discussed in first exercise. So prepare cost to schedule of cost of goods manufactured. So okay, so no, we don't need to go to all the way to cost of goods sold, but let's look at this list, for example, here. Now, total actual manufacturing overhead cost incurred. You see, you don't need to be given, that's the example of what I was saying earlier when the student asked, well, am I going to be given specifically, or very clearly or whatever? Well, this is very clear. This is super specific, maybe too specific, right? So you're given here now, total actual manufacturing overhead cost incurred, 473. But you don't need to be given this number. You need to be able to. Now, all of these might be mixed, right? Just kind of mixed. And now you need to be able to pick costs and say, well, which costs are actually here, manufacturing overhead costs? Well, indirect materials are manufacturing. Indirect labor is manufacturing. Property tax are manufacturing overhead. Utilities, factory, depreciation, insurance, these are all overhead costs, right? There might be some costs here that say CEO salary. Well, that's not overhead cost, right? So it doesn't belong in manufacturing. Or some inventory. Well, we saw these examples in chapter 1. So inventory for, no inventory, but depreciation for some office equipment. That's not manufacturing overhead cost. Right? So, and then we have some here direct labor, and as you can see, there's some indirect labor here, 130, direct labor of 60. So those are the things to pay attention to. Right? But the procedure is the same. So we go through raw materials, purchases, beginning. We end up with 390. But of these 390, we know that indirect materials are 15. So if they are 15, then direct materials are 375. And direct labor, we are given straight 60. Right? We could have been told wages 190 and indirect labor 130. Then we know that the difference is 60 of direct labor. Now, what is applied overhead? What is applied overhead? We are given here below predetermined overhead rate and actual hours. So we just multiply them and get 485. And then we add this whole thing up to total manufacturing. So the rest is kind of. So I'm emphasizing these indirect things because that's kind of sometimes tricky to understand and where to put it, to add it up, right? So these indirect labor here, for example, 130, would not be part of these applied 485, right? It's part of these 473, or whatever the number is, 473. So these 130 of indirect labor is part of these 473, not part of these 485. Of these
Professor, and why is that? Is it, wait, why, I don't know, why is it's like that? Because like they're both overhead anyway, so why isn't the 485 not part of the one? Why is 130 not part of the 485, even though they're both overhead?
Okay, well, I will let you look at this recording again then, because we talked about this a second ago when well, somebody with a similar tone of voice asked the question. So it might be you again, or same person, or it might be somebody else.
Okay, so it was so that's the same. I remember I was looking. So it's the same. It's the same as the previous one that is 4,000. So sorry, the 5,001.
Yes, of course. Yeah.
Okay.
Yeah, same thing. Well, it's the same thing because it's indirect, right? It's indirect. It's indirect. So, yeah, I mean, so it's the fact that you're asking this question again. So I'm thinking, you know, why? But just in terms of helping you and then everybody else. But I feel like, yeah, I feel like this is when students are trying to kind of force it and kind of just punch it into their head. Okay, I'm going to remember that this is just, you know, this number will go with this number. That's kind of reminds me of maybe when students are trying to memorize problems or things, which is not good, because then you get different numbers and different look, let's say on the exam, and then you say, wow, you know, this was completely different. No, it's totally the same. It's the same. It's just look different, but it's the same thing. So same like this problem looks different from exercise 1, I think here, but they're the same thing, right? So, okay. Any questions before we finish?
Professor.
Yes.
For the applied overhead, I'm sorry if you said this before. What does POHR stand for again?
Oh boy. Well, you have to go to chapter 2. POHR is predetermined overhead rate, right? So
okay.
You need to go to chapter 2 because if you haven't done chapter 2 and now you're in chapter 3, which is fine, but then maybe a lot of things are not clear, or especially with overhead, of course.
Okay.
So you need to go to chapter 2. There's the rate that we get to estimated overhead, which is nowhere near included because it's already baked into this POHR, right? So go to chapter 2.
Okay, thank you.
Okay, anybody else? Any other questions? 1, 2, 3. Yes. What did you say? We're good?
Yes, we're good.
Excellent. Thank you. I appreciate it. I get your approval, then we are all set. Okay, only you see 34 people here, and let me see what chat is saying. Is there any other?
Most of them leave chat that they go into class.
Yes, I understand it. I understand. But these are, these are actually club hours, so there's no excuse for 12:30 for not more people to show up. But maybe I can do something really for just those who are diligent and
Okay.
Professor,
yes.
I really appreciate your time, first of all. It's great to have you do this outside your actual duties as a professor. I want to thank you for that. I also want to add, don't you think would be a good idea to have, for example, more like an open room where we talk about the problems that we have encountered during our studying, especially when we follow the lectures, and then maybe work